Welcome back to the $25 Investor, the channel built on one powerful idea. You don't need to be rich to build wealth. You need consistency, patience, and a plan. Let me ask you something real quick. What if just $25 a week, less than what most people spend on coffee, fast food, or streaming subscriptions, could completely change your financial future? What if small, disciplined investments made today could grow into something meaningful years from now? That's exactly what this channel is about. On the $25 Investor, we break down how everyday people can use weekly investing, compound growth, and time to build long-term wealth without complicated strategies or huge upfront capital. No hype, no shortcuts, just numbers, data, and real examples. In today's video, we're focusing on Meta Platforms, one of the most influential technology companies in the world. We're going to explore what happens when you consistently invest $25 per week into Meta, and how that small habit can scale over time. Then we'll take it further. What if you invested $50, $100, $200, or even $300 per week? This isn't about gambling or chasing quick profits. This is about future financing, using disciplined investing today to give your future self options, freedom, and financial security. We'll walk through real growth rates, long-term comparisons, and step-by-step explanations so that anyone, even a complete beginner, can understand how the numbers work. So if you've ever thought investing was too expensive, too risky, or only for rich people, this video is for you. Let's start with the foundation. What it really means to invest $25 a week into Meta. Investing $25 a week might not sound impressive at first. In fact, many people dismiss it immediately because they believe small investments don't matter. But this mindset is exactly what keeps most people from building long-term wealth. Let's break it down. There are 52 weeks in a year. When you invest $25 every week, your annual contribution comes out to $100 to $300 per year. That's manageable for most people, especially when spread out weekly instead of as one large lump sum. This strategy is called dollar cost averaging. Instead of trying to time the market, you invest the same amount consistently, whether prices are up or down. Over time, this smooths out volatility and reduces emotional decision-making. Now imagine applying this strategy to a company like Meta Platforms. Meta isn't a speculative startup. It's a global technology powerhouse with billions of users, multiple revenue streams, and long-term exposure to digital advertising, artificial intelligence, and immersive technologies like virtual and augmented reality. By investing $25 a week into Meta, you're not betting on short-term price swings. You're buying ownership in a business and allowing time and growth to do the heavy lifting. The key variable here isn't how much you invest at once. It's how long you stay invested. Small weekly contributions, when combined with long-term growth rates, can snowball into surprisingly large numbers. The earlier you start, the more powerful compounding becomes. In this video, we'll examine exactly how that compounding plays out with Meta, using real historical growth rates, not guesses, not hype. Before we look at the numbers, let's understand what Meta actually is, why it matters, and why so many long-term investors continue to believe in its future. Meta Platforms is the parent company behind some of the most widely used digital products on the planet. These include Facebook, Instagram, WhatsApp, and Messenger, platforms that collectively serve billions of active users every single month. At its core, Meta is a digital advertising company. Businesses pay Meta to place targeted ads in front of users, and this advertising engine generates the majority of the company's revenue. The more time users spend on Meta's platforms, the more valuable that advertising real estate becomes. But Meta doesn't stop there. The company has been aggressively investing in artificial intelligence, using AI to improve ad targeting, content recommendations, and user engagement. AI also helps Meta operate more efficiently, which can improve long-term profitability. Another major focus is the metaverse, a long-term vision involving virtual reality, augmented reality, and immersive digital experiences. While this area is still developing, it represents potential future growth beyond traditional social media. So why should investors care? First, Meta benefits from scale. Billions of users create massive network effects that are extremely difficult for competitors to replicate. Second, Meta generates strong cash flow, giving it the ability to reinvest in innovation, buy back shares, and weather economic downturns. From an investment perspective, Meta has demonstrated the ability to recover, adapt, and grow, even after major challenges. Long-term investors are often rewarded not by perfect timing, but by owning strong businesses through multiple market cycles. When you invest $25 a week into Meta, you're aligning yourself with global digital advertising growth, long-term AI innovation, and a company with enormous user reach and pricing power. The next step is to see how Meta actually performs compared to the broader market, and whether its growth justifies long-term investment. Meta versus S&P 500, how Meta outperformed the market. The S&P 500 is the gold standard for measuring overall market performance. To beat it signals above average growth. Over 3 years, Meta grew more than twice as fast as the market. At 5 years, that outperformance remained clear. Over a decade, Meta averaged 25.54% annual growth, significantly outpacing the index's 15.72%. For a $20 weekly investor, this higher growth rate is what makes every dollar you invest work much harder for you. Meta has demonstrated sustained growth, making it a serious foundation for any long-term weekly investment strategy. Disclaimer: important information for viewers. Before we go any further, it's important to be clear and transparent. This video is for educational and informational purposes only. It is not financial advice, and nothing in this video should be interpreted as a recommendation to buy or sell any stock or investment. I am not a financial advisor. The examples, calculations, and opinions shared in this video are based on personal research, publicly available data, and historical performance. They are provided solely to help viewers understand how long-term investing and compounding may work in real-world scenarios. Investing in the stock market involves risk. Prices fluctuate, companies change, and economic conditions can impact returns. While historical data can help illustrate trends, past performance does not guarantee future results. The purpose of this channel, The $25 Investor, is to educate and inspire viewers to think long-term, understand the power of consistency, and learn how small habits can compound over time. Always remember, you are responsible for your own financial decisions. Now that we've covered that, let's move forward and break down Meta's growth rates in more detail. Growth rates are the engine behind long-term investing. They determine how fast your money compounds and how powerful small weekly investments can become over time. Over the past 3 years, Meta delivered an average annual growth rate of 48.38%, reflecting a strong recovery phase and improved efficiency. Looking at the 5-year growth rate, Meta averaged 27.23% per year, showing consistent performance across different market conditions. Zooming out to 10 years, Meta maintained an impressive 25.54% annual growth rate, highlighting its long-term expansion and innovation. Why does this matter? Because compounding works exponentially. Each year's growth builds on the previous balance, making your money grow faster over time. For those investing $25, $50, or $100 a week, these growth rates determine whether your portfolio grows modestly or transforms into something life-changing. Meta's history suggests that time and consistency are rewarded significantly. Next, we'll see what $25 a week looks like over decades. How much capital do you actually invest with $25 a week? Before people get excited about growth, returns, or big future numbers, it's critical to understand one simple truth. How much money did you actually put in? This section focuses purely on capital invested, not growth. This is the money that comes directly out of your pocket when you invest $25 per week consistently without missing contributions. Let's start with the basics. There are 52 weeks in a year. When you invest $25 every week, your annual contribution is $1,300 per year. That number alone surprises a lot of people because it feels manageable. It doesn't require lifestyle changes or a high income, just consistency. Now let's scale that habit over time. After 1 year, you've invested $1,300. After 5 years, you've invested $6,500. After 10 years, you've invested $13,000. After 15 years, you've invested $19,500. After 20 years, $26,000. After 25 years, $32,500. And after 30 years, $39,000. Notice something important here. Even after 30 years, your total out-of-pocket investment is less than $40,000. That's the power of small, consistent contributions spread across time. Most people overestimate how much they need to start investing and underestimate what consistency can do. This proves that wealth building doesn't come from massive single deposits. It comes from discipline. This data becomes the foundation for everything that follows. Growth only matters after capital is invested. Now that we know how little capital is actually required, let's look at what happens when growth enters the picture. Now we move from contributions to results. This section answers one question. What happens to your money when you invest $25 a week into Meta and stay consistent? Let's walk through the real data step by step. When you invest $25 a week, your yearly contribution is $1,300. Over time, those contributions compound based on Meta's historical growth performance. 5-year breakdown. Total invested $6,525. Portfolio value $14,250. This means your money more than doubled, even though you only contributed a small amount each week. The difference between what you invested and what you own is growth doing the work for you. 10-year breakdown. Total invested $13,025. Portfolio value $4,164. At this point, growth is clearly outpacing contributions. You invested just over $13,000, yet your portfolio is worth more than 3 times that amount. 15-year breakdown. Total invested $17,900. Portfolio value $112,042. This is where compounding becomes undeniable. Your invested capital hasn't exploded, but your returns have. Time has now become your biggest asset. You'll notice that data beyond 15 years is listed as 0. That doesn't mean growth stops. It simply means we're staying conservative and transparent by not projecting further without verified assumptions. The takeaway here is powerful. You didn't need a high income. You didn't need perfect timing. You just needed time and consistency. Small weekly investments allowed Meta's long-term growth to multiply your money far beyond what you personally contributed. Now let's take the exact same strategy and simply double the weekly contribution. Instead of $25 a week, imagine investing $50 a week into Meta. Your yearly contribution now becomes 50 x $52, or $2,600 per year. Still manageable, still realistic, but the long-term impact becomes much more dramatic. 5-year breakdown. Total invested $13,050. Portfolio value $28,500. You contributed just over $13,000, yet your portfolio grows to nearly $30,000. Once again, growth does more than your contributions. 10-year breakdown. Total invested $26,050. Portfolio value $80,329. At this stage, your investment crosses a psychological milestone. 6 figures is now clearly in reach with time. 15-year breakdown. Total invested $35,800. Portfolio value $224,084. This is the compounding effect most people never experience because they quit too early. Doubling your weekly investment didn't just double your outcome, it accelerated it. Time plus higher contributions creates momentum, and momentum creates wealth. Again, we intentionally stop projections beyond 15 years to avoid speculation. The point isn't prediction, it's possibility. This section shows that increasing your weekly investment, even modestly, can radically reshape your financial future without requiring extreme sacrifices. $100 a week into Meta, when consistency turns serious. Now let's take a major step up. Instead of $25 or $50 a week, imagine committing $100 a week into Meta. For many people, this level represents a shift from casual investing to intentional wealth building. First, let's establish the annual contribution. $100 x 52 weeks are $5,200 per year. That's still far less than what many people spend annually on lifestyle inflation. But when invested consistently, it becomes powerful. 5-year breakdown. Total invested $26,100. Portfolio value $57,003. In just 5 years, your money has more than doubled. Already, growth is contributing more than your actual deposits. 10-year breakdown. Total invested $52,100. Portfolio value $166,159. This is a critical inflection point. You invested just over $52,000, but your portfolio crosses 6 figures largely due to compounding. 15-year breakdown. Total invested $71,600. Portfolio value $448,169. At this stage, the math becomes emotional, nearly $500,000. Built not from luck, but from a predictable, repeatable habit. What's important here is that the growth is now doing most of the work. Your annual contributions matter, but your portfolio is increasingly fueled by returns on past returns. This is why long-term investors say the first decade is the hardest and the most important. Now let's raise the weekly contribution to $150 a week. This level is where many investors start thinking seriously about early financial freedom. because the timeline begins to compress. First, the math. 150x 52 weeks equals $7,800 per year. Still achievable for many dual-income households or professionals, and the long-term payoff can be substantial. 5-year breakdown. Total invested $39,150. Portfolio value $85,505. Even at 5 years, the growth gap is visible. You invested under $40,000, yet your portfolio is already pushing towards 6 figures. 10-year breakdown. Total invested $78,150. Portfolio value $240,989. In just 10 years, you cross $250,000 without any lump sum investing or market timing. 15-year breakdown. Total invested $107,400. Portfolio value $672,253. This is where compounding becomes impossible to ignore. Your portfolio grows faster than your contributions, and time becomes your strongest ally. At this level, investors often realize that wealth isn't about how smart you are, it's about how long you stay consistent. Let's push the strategy further. At $200 a week, investing becomes a structured wealth plan rather than a side habit. Here's the annual contribution. $200 times 52 weeks equals $10,400 per year. Now look at what happens over time. In just 5 years, with $52,200 invested, your portfolio value hits $114,700. You cross 6 figures faster than most realize. By year 10, you've invested $104,200, and your portfolio reaches $321,119. This is where it starts looking like a major retirement fund. After 15 years, with $143,200 invested, you're approaching $1 million at nearly $896,000. Growth is no longer helping, you're now being carried by it. This is where the shift happens. Wealth is not linear. Once compounding reaches critical mass, results accelerate dramatically. Whether it's $50 or $200, the secret is the same: consistency and time. Start building your structured wealth plan today. $250 a week into Meta, turning discipline into wealth. Now we step into a level of investing that represents serious commitment. At $250 a week, you're deliberately building long-term wealth. $250 times 52 weeks equals $13,000 per year, a consistent habit scaled over time. 5-year breakdown. Total invested $65,250. Portfolio value $142,508. In just 5 years, your portfolio more than doubles. 10-year breakdown. Total invested $130,250. Portfolio value $401,649. At this stage, you've crossed $400,000 through compounding. 15-year breakdown. Total invested $179,000. Portfolio value $120,422. This is a major milestone. You invested under $180,000, but your portfolio grows beyond $1 million. This isn't luck, it's math, time, and consistency. Scaling your weekly investment dramatically accelerates your path to financial independence. Projections are conservative to stay transparent. Finally, let's look at the highest contribution level in this analysis: $300 a week. This level is typically achieved by investors who prioritize long-term freedom and intentionally structure their finances around investing first. Annual contribution: 300x 52 weeks d $15,600 per year. Now watch how compounding responds. 5-year breakdown. Total invested $78,300. Portfolio value $171,010. In just 5 years, growth adds nearly $100,000. 10-year breakdown. Total invested $150,600. Portfolio value $481,979. $500,000 built without market timing. 15-year breakdown. Total invested $214,800. Portfolio value $1,344,507. This is where compounding fully takes control. Your portfolio is now growing faster in a single year than your total annual contributions. At this point, your money is working harder than you are. Wealth rewards patience, not speed. The market favors those who stay consistent long enough for compounding to dominate. So what does all of this really mean? It means that you don't need to be rich to build wealth. You can start with $25 a week, an amount almost anyone can manage, and still give yourself a legitimate chance at financial success if you stay consistent long enough. Meta's historical growth shows what's possible when small weekly investments meet time and compounding. As you've seen, increasing your weekly contribution from 25 to 50, 100, 200, 250, or even 300 doesn't just increase your results linearly, it accelerates them. The most important takeaway isn't the exact dollar amounts, it's the habit. Consistency beats intensity, time beats timing, and discipline beats motivation. In upcoming videos, we'll explore ETFs like QQQ, SPY, VOO, VIG, VGT, SMH, and many more. You'll see side-by-side comparisons and discover which investments have the potential to build long-term wealth, even if you start with just $25 a week today. If this video helped you understand investing more clearly, please like and subscribe to the $25 Investor. It helps the channel grow and ensures you don't miss future videos designed to help you build wealth, one week at a time. Thank you for watching. Your future self will thank you for starting today.